This
give me
conference
a
will
lot of
now be
information,
recorded.
but
Yeah,
I
yeah.
I may not be able to digest everything, so it will be good for me to go through those and just
Correct,
understand.
correct.
Yeah, but
Yes,
but
yes.
you can be rest assured that this will not be shared by me with anybody, because I
No,
believe
no.
in those professional ethics.
No, no, nothing will happen. There are 130 crores of people.
Yeah, yeah,
How
that is
many
fine.
people are going to see you? Yeah, no, that's not a problem. If you even share or that thing, that's not a problem. But
No, no, no. As
this
I
is not
said,
issue.
I strictly believe in intellectual property rights.
No problem. So
Okay.
today we are going to see about the investing overview. So the basics of investing and how you can do that. You want and what are things you should take care if you want to do for investing. If you want to enter in the stock market, there are two things to take part. One is investing, other is trading. These are only two things possible. Okay, so we'll see about investing slightly, and then trading. What are the setups? So those things also we will see.
Yeah, yeah,
So, as I said, investing or trading are the two things. We can you see my screen?
yeah. I can see your screen, Ramesh.
No, I could not
Now it has
see.
gone blank. Now it has come to the
Wow.
first page, webinar 2.
Okay,
Yeah,
okay.
now I can
This
see.
now you can see. In case you are not able to see, let me know.
Yeah, yeah, sure.
So these are the difference between investing and trading. Many of things you should be knowing, but let me just take you through also basics. Like investing is a wealth creation. Okay, suddenly it's not that you'll trading you'll get every day or every week, month, some income will come. That is very small will be okay. But because investing, it will be 10 times, 20 times, 30 times possibility of growth is possible in investing. In case of investing, you do only entry once or twice, but in case of trading, you should do entry and exit several times.
Yeah.
And investing is a passive activity. It's like you buy some company, you're like a shareholding in the company, and you be there forever. Like Warren Buffett says that now, if you don't cannot be in the part of the shareholder for 10 years, don't even hold for 10 minutes. That's what it tells. So that's the
Oh,
investing philosophy. What Warren Buffett tells. So if you
okay.
cannot hold it for 10 years, don't even hold for 10 minutes.
Right. Are there any good books by Warren Buffett? Of course, there are many of them, but the ones which you would suggest, Ramesh, to read.
Yeah, yeah. Intelligent Investor. There is one book.
Yeah.
That book I already put in the folder actually, ebook. The ebook,
Yeah. Correct. Yeah.
there is already a saved. You can just go through that. So one of the very famous books,
Yeah.
what recommended by even Warren Buffett also.
Right. Okay.
Yeah. Then investing needs a long-term view, and trading is a very short-term view. Sometimes few minutes, few hours. So investing, in case of investing, you need to put the full amount in cash because you don't enter and exit. Margin money is not possible. But there is a guy he has written a book called 212 Degree Investing. Okay, so that guy is a PMS. He is running a PMS where he was holding Britannia Industries only through margin money. So he bought some
Oh.
lots in Britannia, and he used to rotate that. He's carrying forward that thing only in margin only, futures only.
Wow. Okay.
So that is also possible. Okay, if you have long-term view of particular stock, like Reliance, okay, now I saw the trend has changed. Long-term view is positive, and you don't want to put money, and you have enough money. Like for example, one lot is 5 lakh rupees. Okay, you have enough cash, but you don't want to put all the cash in the stock. Then you can do margin money. Okay, where you'll be needing only 30%, 35% of the total cost, and the balance amount you keep in your cash kitty, and you can get some interest on that income, on that cash.
Yeah. Mm-hmm.
But the only thing is that in case of futures, you have to pay some interest. Okay. For
Correct.
example,
Correct.
a stock is trading at 2,000 rupees. In buying futures, you have to pay some 1% more. The premium will be there for buying the futures.
Right.
Okay. So that is one thing. And margin money, whenever the market to market losses or profit is there, that you have to take care. So this is the one thing you have taken in case you want to do investing through futures. Okay, and in case of investing, you need to do the fundamental analysis. We'll see what are the fundamental analysis basically you should do. And in case of technical analysis, in case of trading, you should do technical analysis.
Yeah.
And in case of investing, you should track your stock prices. Sorry, I'm not no need to track the stock prices on daily basis. You can see once in a while because there's a lot of noise in the short term. But in case of trading, you should do very closely depending on your style of trading. So these are the basics of difference between investing and trading.
Mhm.
So in case of investing, you can get escape. You can escape from the traps by using technical analysis. That's it's like a brothers. Both investing and trading are brothers. If you don't know trading, the technology, technical analysis, those things, you just buy and hold. That may not work nowadays. Most of the time. Now, before it was like Infosys, Wipro, like all these companies were there, where Asian Paints, the management was very good. There is a good corporate governance, and there is no mindset of the shareholders to cheat the investors. But
Yeah.
nowadays, a lot of cheating happens, and there is no ethics, okay, morals followed by the promoters. So nowadays, it becomes very difficult to find a stock where you can hold, like, you can see Wipro you bought for 1 lakh, now it's 15 crores. Those things are not possible nowadays.
Yeah.
By then, become 50 crores will not be there in this world. Okay, what is the point in having 15 crores? And even if you give that wealth to the children, they'll not know value of that money also.
Correct. Correct.
Okay, so those things may be very interesting to listen, but maybe difficult to follow. Okay, but the thing is that it's a lot of patience required, and in the stock market, once you be there, and you have to be active till the death. It's not that you cannot retire there. In the stock market, if you are investor or trader, both, you cannot retire at all. There is no retirement at all. That is the one thing about the profession.
Yes, that is true. Agree.
Thing is that you will be active. See, even if you become retired, okay, if you don't know any, if you don't have anything to do, okay, so it is become boring also. Life becomes more
Correct.
frustrating.
Correct.
You should be
The
active
more
till your death.
exactly, the more your mind is active, it's good for you.
Once you stop learning, you're dead almost.
Yeah. Correct.
The death doesn't come real death. The death comes actually by not learning actually. So in the market, you need to be always learning and know new things, how the market is vibrant, how it is, what's happening. Okay, that's the way you'll be always keep informed. So in case of fundamental analysis, these are things broadly you will be seeing it. Whatever you told will be there here. Okay, the how much top line is growing, how much profit is growing, how the
Yeah.
margin is expanding. Okay, like if you see heard about Trimale Chemicals, there is a company. Okay, it went Trimale Chemicals. Okay, now the margin has dropped actually. Okay, from normally 22%, the margin is 82. Now it will come down by 8%. It comes drastically. The day first it went down by 12%, 15%. Then yesterday it went down by 8%. Okay, in no
Right.
time the market punishes them in case there is no margin. So margin, normally what they tell is, in case of investing, the wealth expansion or the wealth creation happens multiple baggers only because of margin expansion, and then consequently P expansion. A stock that is trading at 5 times P ratio, P ratio, correct?
Yes. Price earning ratio. Yeah.
Yeah. So the P ratio means 5 times. A stock trading, for example, 100 rupees, which is 5 times P ratio. If it is become 50 times P ratio, then 10 times. It becomes 10 times without any change in the P ratio in the earnings. So just by P ratio expansion, your wealth creation happens by 10 times.
Mhm.
So the everything depends on the margin expansion actually. The people, the investors always see for the margin expansion. And then what is
Right.
the EBITDA CAGR? CAGR is compound annual growth rate.
Mm.
CAGR, correct?
Yeah.
Okay. And then what is the price to book value? How much times the book value? If there's some company closes on this date or something, what is the book value? The amount the investors will get. If anything is very comfortable, the book value of the company is 100 rupees and the price of the stock is say 50 rupees. Then you get 100 rupees if the company closes. You are rest assured that you get your money back.
Yeah.
So that's the comfort you get for book value in comparing the price to the book value. And what is the market cap to enterprise value? Enterprise value is the value of the complete business. If the business is sold to somebody else, this is enterprise value, what you get. And if the market cap, for example, a stock which is trading with market cap is, market cap, correct?
Yes, I do.
So market cap, what is the market cap to enterprise value? You'll see. If there is a discount, there is a very good time to buy the stock.
Right. So what is the difference between the enterprise value and return on investment? Because your return on investment is like what is the return you're getting on your investment?
No,
But
no, not our investment. It is the company. The
correct.
company, how
But
much
what
they
is
invested, how much they are making profit.
Ah, right. So yeah. So what is what is the definition of enterprise value? Is it the profit line of the business, or is
No,
it
no, assets, total assets, net of debts. Those
okay?
things compares. If the company is sold, it's a simple
Basically, the
layman terms.
goodwill value of that organization, in a sense
Yeah,
that
everything.
not
Not
in
only
real
goodwill.
terms, but yeah.
If the company is sold to somebody else, this is the value of the company will get.
Okay, okay. But there are times, it may not necessarily be the value as per the balance sheet, but it could be some
Correct. Agreed, agreed.
other values. So I
It's a
think
theoretical. It's a theoretical only. No doubt about that.
correct. Yeah, yeah, correct. Okay.
In real value, it could be different. And
Yeah,
what is the
okay.
return on equity they're earning, the company is earning? What is the market share of the company? How the products are selling? Debt equity ratio, how much debt they're holding compared to equity? Because the higher the debt, need to be higher the interest rate. The interest cost will be very high. So that can kill the company's profits. So debt equity ratio is what they see. How much shares they pledged by the promoters? What is the shareholding pattern? You just told about that now, starting of the webinar. About the
Yes,
shareholding pattern. What is the management
yes.
guidance? Like in case of IT companies, they see what is the management guidance for the future. If the guidance is good, then people try to get a hold of that stocks. And what is the NPA situation for financial institutions? What is the gross NPA? What is the net NPA? What's the dividend yield ratio? If the
Mm.
company is giving a good dividend yield of 5% of on the stock price, then people don't mind going for the stocks because the capital appreciation may not be there, but you get dividend yield, good dividend yield, which you don't get in anywhere else. For example, like REC, PFC, the power companies, they give almost 8%, 9% dividend yield. So even the price capital appreciation does not happen, you may get some dividend from the companies. So even Warren Buffett says that try to find a company with the highest dividend yield. Those companies chance of collapsing is very less. So high dividend yield companies, you have to keep finding for the investing.
Okay,
So
okay.
because
So he says the ones which are with low dividend yield are safe to invest. Of
no,
course,
no,
you have to
high
look at
dividend
the
yield.
pattern.
No, no, high dividend yield.
Okay, they are safe to invest.
Safety. Because what happens if company making profits, if they don't declare dividend, means there is a problem because they don't have enough cash flows. Because if for giving the dividend, you need to have some cash flows.
Right,
If
right,
the company does not generate enough cash flows, they cannot pay dividends. So
right.
if somebody
So
is paying 8% dividend yield on the stock price, then it is a very good 8%, 10% means very good, fantastic dividend yield. So those companies have enough cash to generate and generating to pay you dividends, and also the capital appreciation, like if they pay 8%, 9%, in 10 years time you will get your investment back. In addition, there will be capital appreciation. There is a book value to the stock also, and they are
yeah,
generating more profits also.
yeah.
So that way you are more protected in case of investing in the stocks where you have good dividend yields. What is the price earning growth ratio? A stock, for example, a P ratio of a company is say 30 times, but P ratio is growing at the same, there is no growth of a P ratio is same 20 times. Okay, then we are paying a higher amount of for the P ratio. So PEG
Yeah,
ratio should be more than one. That is very important.
right.
And finally is the corporate governance. This is very, very important. This you cannot find in any books, not sorry, any articles, newspaper, or anywhere in the world. In the black and white, you cannot see about the corporate governance. Everything comes as surprise.
Yeah,
If there is some big like yesterday you saw about the Z Enterprise, Z Limited, all the media stocks of Z Group fell down by
right.
25%.
Yeah, yesterday's this I've not been following. So what was the reason why it fell by 25%?
So the SL Group, what happened? SL Group, they had operate some deposits of 3,000 crores through a shell company in some banks or something, which is the Serious Fraud Investigation Office (SFIO). They have been investigating some shell company on the deposits that
Right,
were made in the account after the post demonetization.
right.
So that company is operated by this SL Group.
Okay,
So
okay, okay.
that is one thing. They had suspicion about the company doing some mischief activities, and also SL Group had some meetings with some few stakeholders in London about the stake sale in the Z Limited, Z Media. So those things got suspicious about the activities about the stakeholders, shareholders, was something going on in the company and something wrong happening. So the stock fell down. All the Z group fell down by almost 25% yesterday.
Wow. Okay.
So the stocks have reached 44-month low. So 44
Wow.
weeks low.
Right. 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 But would you suggest
So
buying it then?
no, that's all. We are going to see a few principles which you have to
Right.
keep in your mind. And it's not like you write it or listen it now, and you have to store it permanently in your subconscious mind. Whenever you're buying a stock, you should know this all things, then only invest. Never,
Right.
never buy a stock without seeing all these things. Okay. So first
Yeah.
thing is you have to see all these things before investing.
Perfect.
Okay. Now, what are the principles we have to follow while investing? So wealth creation happens with margin expansion, P expansion. I told you, correct? So what is the operating margin? Say the margin is 8%, 10%, 12%. Okay, it's going
Yeah.
20%. Then margin P expansion happens. So side by side, I will just take you through one screen. There is a website called Screener.in.
Uh-huh.
Okay. So are you aware of this website?
Yes, I am.
Okay. So in this website, you can see the stocks, no? Where, for example, let us see HEG. You heard about the company called HEG Limited.
Mm-hmm.
So since I registered with the login, so I can store this all these parameters here. You can see the parameters. These parameters you can see.
Right.
Okay, and always you can refer to these parameters before doing any investing activity on a particular stock.
Right. Right.
If you see the margins, what happened here? It was around 6%, 2%, 9%, correct? Now then it expanded to 46%, 60%.
Mm. Mm.
So what happened to HEG? HEG, if you see in the weekly charts, it went from where? In 2017, around 265 rupees, it went to 4,400 rupees.
Wow. Mm.
So this was the margin expansion. People, investors or traders, they are very happy about margin expansion.
Mm.
Okay,
Mm.
when they had just made 27 crores profit, 2 crores, 3 crores profit loss, they're not bothered. Then
Mm.
what happened? Because of margin expansion, the profit has gone to 114, 340 to 634.
Mm. Mm. Can you explain a bit more on this margin expansion and the margin itself?
See what happens. For example, you are running a apparel store. Okay, a ready-made garment store. Assume.
Mm-hmm.
Okay, so ready-made garments, that's a core business. Okay, so for
Okay.
example, you are buying a shirt from a wholesale dealer for say 100 rupees. Okay,
Okay.
100
Okay.
rupees you are buying, and you are selling that for 200 rupees. So 200 rupees minus 100 rupees. Let me just
Okay.
take you to
So
next.
this is just the gross profit margin you're saying.
Yes, got it. You know about
Ah,
gross profit, correct? Yeah, that's what gross profit margin is. What operating margin we call operating profit margin, and also direct
oh,
expense,
the,
whatever
the
incurred.
margin is basically the contribution or the gross margin which is being
Yes,
spoken
yes. You
of.
see here, no? Material cost and employee cost will not come mostly. The direct
Correct.
expenses, whatever. That's called operating margin or gross profit margin.
Yeah. Correct. Correct. Yeah.
So these margins matters a lot.
But
Like
tell me one thing. If you see the pattern between June and September, there's a huge increase in the profit margin,
yeah.
operating margin. So it raises a suspicion as well as how can the company suddenly grow within 3 months from 23 to 190 and then to 558. So what does that happen? Either it should have got a very big order if it's apparel
No,
stores,
see
for
that's what.
example.
See that's the reason I told you. Like in case of IT profession or medical profession, you learn only that thing what you're doing. Okay.
Correct.
In case of stock market investing, you should be an all rounder actually. Okay. What happened? The
Yeah.
carbon what they're producing here actually. Okay. That is produced by China also. What happened
Right.
in
Okay.
China? China, a lot of industries were producing the carbon. Okay, carbon were stopped or closed actually because of pollution reasons by the Chinese government.
Okay.
So because of that, the supply has reduced actually. So when the
Ah.
supply from China got reduced, the supply from India got increased. It could not be increased so much, so they started demanding more margins. The item which have been selling for 110, say 500 rupees, they've been selling for so much, almost 5,000 to 4,000 to 5,000 rupees.
Right. 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 Right.
Like
Understood.
for
Understood.
the example of 100 rupees you bought, 200 rupees you're selling, you make 50% margin. Now you're selling for 1000 rupees.
Right.
That's what
Right.
happened.
Yeah, understood. Understood. So
So
is this so how do you keep a track of all this news which is relevant to whether industry or that company? Is there
you
some
have
kind of
to.
apps or something? Of course, earlier I used to read Economic Times or Financial Times and all that, but now probably I've got a bit diverted. But it would be good to come back into that. So what are the good ones to read?
See, business magazines one thing we have to
Uh,
read, and a lot of business magazines are available. Okay,
okay.
once you like, for example, electric cars, what is happening in the industry, electric cars. Okay,
Uh-huh.
see, this is very difficult. Actually, it is very difficult to find what industry which is going to go up. Okay,
Mm-hmm.
one small tip is there where you can find very easily which stock is going to go hit. Okay,
Mm-hmm.
the one thing is in that is when you come technical, I will show you that also.
Mm-hmm.
If you go to 52-week high low, okay,
Right.
always you should keep a tab on 52-week high low stocks.
Right. Okay.
Okay, I'll just go to NSE website, nsindia.com.
Yeah.
There you can see here 52-week high low.
Yeah.
So this gives you understanding which stocks are hitting new highs.
Right.
So this stock HEG, what happened whenever it started hitting new highs in June 2017, correct?
Mm-hmm.
2017 when it started hitting new highs. If you see here, they started hitting new high in the month of say 22nd June around 300 rupees. Okay. Now when you
Mm-hmm.
see this list of the stocks which is hitting new high,
Mm-hmm.
just get to these stocks and understand what's the reason and what's the technical setup. Then
Right.
you have to catch hold of the stocks. It's very simple. So instead of getting into so many news, understanding what is industry
Uh-huh.
developing, which company is going to hit, what is going to multi-bagger, is a very
Right.
simple step where you just go through these stocks and understand this, what's happening, study these companies only.
Right.
Only
So
doing
this.
this will give you a very
Mhm.
easy listing of the stocks which you want to take hold.
Right. Right. So this is actually a very excellent point. But on this, I probably would like to ask you one more question on this then. Say
Yeah,
it says new 52-week high or low, right? Now,
yeah.
high. In that case, is it the past 52 weeks? And that's where I always get confused. Say I'm taking a 52-week high or low between
Uh,
say Jan and December. Okay.
no, no,
In
not like
that,
this. Trailing. It's a trailing 52-week high.
okay,
Now, for example, now it is 26th Jan.
correct.
So from 26th Jan 2018 till 26th Jan 2019, there is a 50 week. What is the high price today? If it is the highest in the 26th Jan 18 to 19, then it's 50 week high. Okay,
Correct.
when you are going
Then
to the 15th February, we are
the
going.
voice,
Then highest price on 15th February. Hello? Yeah.
your voice got broken in between, Ramesh. Can you repeat that point?
Now, now you're able to hear?
Yeah, I'm able to hear you.
So, for example, we are on 15th February 2019. So, on 15th February 2019, if it is the highest price between 15th February 2018 to 15th February 2019, then it is 52-week high.
Correct.
So,
Correct. Then
today,
what?
as of today, yeah,
Yeah, in that case, there is always a suspicion that it may start getting into the downward trend. But of course, I mean, we'll come to the candle chart analysis.
yeah,
But
technical.
from a very, very, very layman perspective, when you look at the 52-week high and low, and you see the prices at almost at the high, then you are a bit scared to get into the market. At that point, you say that no, there could be a
Correct.
market correction and it may fall. So probably this is not the best time
So,
for me to
so
be
the
in
what is
here.
the indication is you have to see always both 50-week high, 50-week low. Now, if you see 8 securities are showed in trading 50-week high. If you see 50-week low, 215 securities are trading 50-week low. So this ratio helps you in understanding what is the broad market strength. If the broader market is weak, this shows that 8 out of 215, this ratio is very, very bad. Correct?
Correct, correct,
So if
correct,
it is 1:1 is fine. 1:1 is fine. It is something 1:2 several times, like it is 25 times.
correct, correct, correct.
Okay. So when the broader market is weak, then you should not get into that long-term mode now. So you should wait
Right.
for things to settle down. And also, like when you see the technical analysis, we're going to see like when you can enter the market also. Okay.
Correct,
So all the answers
okay.
are going to get by the end of this presentation, in 1 or 2 days webinar.
Yeah, yeah.
Okay. So we'll see the skinner.in where you can get this information. So the second point actually we covered actually already. Never try to catch 52-week low as no one knows where it will stop. So normally any investors or trader, they think that okay, you're asking the question, Zeal enterprises, now is it a good time to enter?
Correct.
So this will be answer for you. Never try to catch a 52-week low at all.
Okay.
Because if you see Tata Motors, you heard about it, correct? You see Tata Motors.
Yes.
Tata Motors was hitting 52-week low. What happened? He started keep hitting 52-week low. Here he hit, then it went up, then again it started hitting, and then where we are now 173. From 560, we reached 173. So it is making always keeping the lows only. Never it is try to manage to come up. So the chance of the probability of you making profit by buying a 52-week low is very low, and probability of hitting buying a 52-week high is very high. But it's not that you buy blindly anytime you wanted a 52-week high. As we saw the 52-week high stock here, a stock for example CESC Ventures. Okay, it doesn't mean that you buy this now you will make profit. Okay, when the broader market is weak, normally what happens is all the stocks together as a bunch will fall, whether good, bad, quality, not quality. Nobody want to bother. Now, when there is a problem, everybody want to panic and get out.
Right.
Nobody is bothered to buy any quality. No, quality is not matters because greed, more than greed, fear is the more powerful than greed.
Yeah.
Okay, so that is very important. So 50-week high is what you have to see because momentum is on the upside. The chance of losing is less at the time when you buy a 50-week high, but there is a time, okay, as you said. Then too much diversification cannot give you returns. Only 10 to 15 stocks is ideal. That's what suggested by many of the top tier investors. If you buy so many stocks, okay, it doesn't mean Warren Buffett tells one thing. Too much of diversification is protection against ignorance.
Okay.
So you don't know what to buy, what will go. Like as you asked me, HEG, how you find HEG will go. Okay, you know that market, that industry is going to go up. Then all the stocks in the industry you start buying. Okay, everything may not go so much. There's a like if you want to know, the consumer consumer industry is going to go up, FMCG is going to go up. Then you start buying Colgate, you buy Henson Unilever, you buy Britannia, all the stocks. Okay, not everything is going to go up.
Correct.
So you need to buy a stock which is going to go up, which is having momentum, which the technical support is there. Then find one idea to double your money. Every 3 years can make 10 lakhs to 100 crores in 30 years. One small principle. So when you're buying a stock, is there potential to double in 3 years is what you have to see. Just only one idea per 3 years will give you 100 crores in 30 years if you invest 10 lakhs. It looks very simple, but you need to find out something which is going to double in 3 years.
Right. So what are the parameters for that?
So only thing is the technicals. Technicals is going to help you.
Technical
because whatever stock you pick up, okay, there is no guarantee that it will go up and double. Correct. Okay, you need to have some. Sometimes a lot of inside information is required actually.
Right.
Like if you see, like you follow Warren Buffett or say Rakesh Jhunwala, anybody. Okay, nowadays they also become insiders. Okay, there is a company called A to Z Maintenance. There is a company. Okay, so their hands join together with the promoter. And Rakesh Jhunwala gets some 10% stake in the company. All the investors who wanted to buy start buying the company shares.
Correct. But as soon as Rakesh Jhunwala buys it.
Yeah, Rakesh Jhunwala knows that he's going to get some kickback, whatever incentive or whatever benefit he will get. Okay, but other investors will not get it. So he will silently exit slowly, or he will not lose if he even holds it because his loss is getting compensated by the promoter.
Correct.
So the thing is that you cannot just blindly follow somebody also.
Yeah. Coming back to my earlier question, Ramesh, what is the best way to keep track of the latest news? For example, you gave a very good example on HEG, that China has stopped a lot of carbon, companies because of pollution problem, and because the supply came down, there was a demand supply ratio which got skewed up, and that's why these companies started making
There,
a lot of
what I do
profits.
is, yeah, there is a website called Maxter.com. You know that, no?
Which one?
Maxter, Magzter.
MEGZTER, is it?
Yeah,
Okay.
Magzter. Okay, the
Okay.
not this one. Magz. So this website has several magazines. Okay, the
Right.
cost is very less also. It is 1,000 rupees per year, something
Right.
only. Okay, and you have several more than 5,000 magazines. Something is available.
Mhm.
In say news magazine, business magazines are available. Okay, you can
Right.
go through this. It's a very cost effective also.
Yeah, exactly. No,
Okay.
that's good to know. That's good to know. Okay.
So
Okay.
okay, you can just go through that. That will be very giving some insight about what's happening in the industry, what is the emerging industries, about startups, what startups are going up. Okay, some ideas you'll get.
Hmm.
And you know about multi-baggers, correct? You know, like 40 times, 50 times you become
Yeah.
multi-bagger stocks. Okay, so
Yeah. Yeah.
investors like to go for multi-baggers. They're not no, interested in the stocks which is just go 2 times, 3 times. So the research tells that 2 out of 100 mid-cap stocks only become multi-baggers. Okay, identifying
Hmm.
such one or two stocks will make you rich. Okay,
Yeah.
so
Hmm.
that is very important also. Like, you have to keep support of technicals also simultaneously to catch hold of the multi-baggers. As I said you, 52-week high, just keep tracking it. Any stock hitting 52-week high, continuous basis every week. Okay, then there is something in that.
Yeah.
Okay, so something happening, and you have to read about the industry where which company they are getting in, because somebody knows something about the company, and that's the reason it is hitting new 50-week high.
Yeah.
Okay, so the 50-week high, 50-week low is very important. If something hits 50-week low, it's a big problem. And a stock down by more than 20%, 25% in a day, at least 20% falls in a single day, then never touch the stock.
Right. Right.
Whatever
I'll.
stocks that fell down, whatever stocks that fell down in 2008 by this much of quantum, okay, and never try to reach the even 50% of the fall. The only
Right.
stock exception was your Titan Industries. Okay, so Z and Yes Bank, you just take the case of all the case. I'll show some examples also. What happened to stock which fell down by 20%, 20%. Okay, and there is some serious problem. Okay, there is stock which is down by 20% plus in a day. A serious problem, sometimes known, sometimes not known. So
Right.
there is always better and safe that you save your capital, protect your capital by not getting into that stock, because
Right.
you're seeing something that which is very costly. For example, Z Entertainment, which was you seen around 600 rupees, whatever. Okay, it came to 300 rupees. If something was sold for 300 rupees, so 600 rupees. Now it is 300 rupees. You compare that price, old price. Okay, and then you think it is cheap, but the fair value is something more, much lower than what it is now. Maybe
Yeah. Yeah.
we are going to see some examples also, like
Yeah.
how we can get protection from such traps.
Yeah.
Okay, now you ask some question. You ask me, huh?
Yeah, I was just asking you, there are some shares in the market. Say, for example, I'll give you an example. Like I am holding a share of Aditya, some Aditya Group flagship company. Okay, it's
Aditya
basically
Birla
a gov.
Capital,
No, not
Aditya
Aditya.
Birla Retail,
No, not
Fashion,
Aditya Birla.
Fashion. Aditya
I,
Birla Fashion is there.
I forgot about that one. I'll tell you the name once I'm able to recall it, or once I see my trading this. I bought it at a very cheap price. I just got it for some 10 pence or 10 paisa or 20 paisa, because it has actually, the operations have stopped and this and all that. But I've just held it in the hope that, when it gets bought by somebody else, because it's a garment company, it may get bought. It
Hmm.
probably could be a risk, but I've just invested about 3,000 rupees or something. So if max
Hmm.
I lose, I just lose some 3,000 rupees.
Yeah, that's
Okay.
the gambling. That's it. Contra trading. That's it. Contra
Correct.
investing. We can tell.
Correct. So, what would you suggest on such kind of investments?
See, because there is no fundamentals or there is no basis of that. Okay,
Correct.
if something goes in your favor, you are lucky. That's it. May happen, may not happen. There is no guarantee. Only God knows.
Right. So
Okay.
it has been lying like that for almost 1.5 years, and I'm just thinking,
Even 100 years, even 100 years happens also. We don't know what will happen. There is a company called Motor General Finance. You heard about the company?
which one?
Motor General Finance.
Yes, yes.
Okay. That company actually had a lot of land actually. Okay, in Bombay. Okay, which is they assume they bought around 1 lakh rupees something. Okay, now it is several crores actually. In the books they are
Right,
not showing enough. What you can tell, the revaluation is not done actually.
right, right,
Okay.
right.
So what happened is like I when I working with my boss and the company, no, uh,
Mhm.
motor
Motor General
motor
Finance.
general finance. Okay, he
Yeah.
bought that share actually, and
Uh-huh.
he is holding almost for 1.5 crores in value. Okay, he's holding 1.5 crores in
Wow.
value of the
Wow.
stocks. If you just
Mhm,
go to shareholding, okay,
mhm,
shareholding, go to the top 1% investors. Okay, you can see this. His name is Suresh Venkatraman. Yes, Venkatraman. No? He's holding 3 lakh shares of this company. Okay, he's put his
wow.
entire wealth in the company actually, literally,
Oh, okay.
and hoping that this 50 rupees will become some 1,000 rupees one day.
Oh, oh, okay. Okay.
Okay, I just see the stock price of this company, Motor General Finance.
Uh-huh.
Motor General Finance. Okay, monthly chart I'll show you. So I know it around 2008 from since then is holding that stock or something. So in the last 10 years, it is holding between 30 rupees, 50 rupees only.
Right, 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 right.
Okay, so everything on hopes only. That's it. Okay, we don't know
Correct,
when
correct.
suddenly that upside will come. Okay, for
Mm-hmm.
this you do not go to the Motor General Finance every day and see. Just seeing the 50-week high low. Okay, you will come to know
Mm-hmm.
about the stock that is hitting a 50-week high, and then
Mm-hmm.
track for 1 week, 2 weeks whether it's continuously going up or just a trap. For example, if you see here, there is a trap here. One time it went to 100 rupees, then suddenly it came back 20 rupees.
Correct,
2008.
correct. Mm-hmm.
Okay, so this is a trap. So you are to whatever you told that picked up may happen, may not happen.
Correct.
Like Vijay Kedia also invested in Repco Home. There is a company called
Mm-hmm.
Repco Home Finance, not Repco Home Finance. There is one company actually he's holding.
Mm-hmm.
That also he bought the company. It's a publishing company actually.
Mm-hmm.
He's in big losses actually. Okay, he's having a lot
Okay.
of calculation turnaround, expecting that will go up all these things. Okay, and he held it. It can go. If you're lucky, all is a matter of time. That's it.
Correct,
Otherwise,
correct.
it is just no pray and wish. That's it. If you
Yeah.
what they tell is as a trader or investor, if you're praying to God and thinking that my stock should come, all these things, if you're praying means then you've done something wrong. You've done the proper study and you've done something
Mm-hmm.
without knowledge.
Yeah,
Okay,
yeah.
so
Mm-hmm.
your original entry was that 3,000 is just a scrap. That's it. Okay, forget it.
Yeah, yeah, yeah.
After 10 years, you see if you are lucky, then you are lucky. That's it. But if something goes
Correct, correct.
from 3,000 goes to 3 crores or something, you are big lucky.
Correct, correct.
Like I know one of my colleague who bought some Lux Industries something. Okay, it
Okay.
was a very
Uh,
I never seen that company also. Lux, he told Lux Industries or something. Suddenly it started moving up.
okay.
Lux Industries. Like I think this was time actually. You know, it was just sleeping in this what do you call that portfolio. Suddenly it
Uh-huh.
went up. He told one day he came and gave some speech. Sir, my stock which is held for some long time now started moving up, and he had some 500 rupees, 600 rupees something it seems based on some news he got. It went up
Right.
to 2,100 rupees. That's it.
Yeah, yeah. Correct, correct.
So this all, you know, when somebody does investment based on some news or some contract trade investing, some other big investor bought all these things, then it is all just a different story. Okay, because you don't have any
Exactly.
proper justification for entry.
Exactly.
Okay, so never you should get it because like what they tell is Warren Buffett, whenever he want to enter any particular stock acquisition or something or investing something, first he sells puts of the company. big time. Okay, then he brings out the news that he want to buy that company. Then immediately all that stock will go up. All the puts, whatever he sold, becomes zero. So he makes money from that and he buys the company also. So this way, how he operates.
Yeah.
So no, these are some insider things what people do for investing. And return investments comes non-linear and comes in bunches. It's not that if I like trading like every week, every day, every month, something, some returns will come. Investment, what happens like mid-cap stocks or something, if you see mid-cap stocks, index went up by 60%, 80% in 2017. Before the 2 years, nothing was there is no return at all. And 2018 also nothing return came. So all the returns of 3-4 years will come in 1 year only. So you have to be very, very patient and wait for the return to come.
Right.
But okay, we'll see that also like about that one thing. If you see, for example, this example, if you see you make 40% return every year for 4 years, and 50th year, if you don't protect your investment, if it falls on 50%, it becomes say 2008. Assume that you made 40% return in 2005, say, 4, 5, 6, 7, 2007. 2008 comes down 50%. Then whatever you earn 40% 4 years is come down and is now only 14% return only you get. Okay, so you have to protect your profits also. Okay, don't expect that like old times somebody tells I bought MRF for 100 rupees, now it is 75,000 rupees, 80,000 rupees. That linear, whatever this parabolic growth, whatever happened that time only. Okay, for example, a house you bought for a plot you bought for say 1 lakh rupees, now it's 25 lakhs. Okay, don't expect that 25 lakhs will become 5 crores. That will not happen. Okay, it will take several times, several months and years. If you see Bank Nifty, the Bank Nifty index was around 13,000 levels in 2014. In 5 years' time, it just doubled. Nothing happened.
Right.
Okay, so the parabolic gain, whatever happened, was in the old times, whatever. Now it cannot happen because a lot of people have entered and a lot of other opportunities are available. A lot of investment avenues are available. So there is not possible because there is some value attached to it. You cannot modify that value. Buy what you see. That's what people tell investors. You see Apple phone, the people are using it, and Microsoft Office people are using it. Like Page Industries, Jockey brand people are using, HDFC Bank, Colgate. These are things what you see around you, and the companies which are producing that, are marketing that, are owning that. If you buy those companies, then you make money. That's what the people tell. So you understand that how the Page Industries is how what happened like HEG. This is HEG, correct? The same way Page Industries made money for the investors. If you see here what happened in monthly view, if you see what happened in 2010, around 827 rupees. In 8 years, where it went 35,000 rupees.
Wow.
So these are things you can easily filter by your 50-week high. So just monitoring a 50-week high. So what happens, for example, a stock is trading around 335. Assuming you saw this year around 850 rupees, 900 rupees. Okay, you don't see that, okay, it is already we missed the opportunity. 300 rupees stock, it is around 1,000 rupees already. It has gone 3 times. Now, is it a good time to invest? If you just keep waiting for that, what happened? It went all the way here. And here, if you got corrected here, for this also we have some rule I will tell you. And I would have taken all the way to 36,000 rupees. Parabolic rise it got. But this 25,000, 30,000 will not go to 100,000, 1 lakh rupees or 5 lakh rupees will not go. Yes. This all thing happens because of the P expansion here at the initial stage. You got in the initial stages. This is now juice is finished. Now all the people who entered here exited now. Now if you enter there, you will get stuck. You see like similarly MRF also. MRF also somebody bought at 100 rupees at something. Everybody exited now. It is 75 to 80,000 rupees. Now it came. It's for last several months. If you see 2-3 years, it is around the same level only. No capital appreciation at all. So when everybody knows about something, there is no point in buying those stocks. Okay, so you have to buy something which people don't know about that.
Right. But when to enter the market, you have to basically do that only, firstly by the reading the technical charts and then looking at the other news and other things rather than just blindly getting into it.
Yes, correct. Okay. First of all, if you see the 200-day moving average is there, correct? We will see about the Dow theory also. So that one will the overall broader market. What is the placement, and then you can start entering it. So the answer will be you'll get the answer for that question also in shortly. So macro data is unreliable. Okay, telling the GDP growth will come like this, all this blah, IA inflation, IAP growth, all these things are just are noise makers. Okay, that is not going to help you everything. If you see IAP growth is good, but profits, there is no profit in the industries. Lot of losses for the companies. So these are not just time wasters. So this is just for news only. Okay, news is for entertainment only nowadays. It's not for investment decisions. You should not take investment decision based on the news what you see, because that the time you see the news, everything is finished actually. The climax is finished. It is like you're going to say, you're buying a ticket to see the Bahubali climax.
Yeah.
Okay. You're not seeing the full movie actually. The full movie is finished already. The news will come after the. You are the final person to see the news actually.
Yeah.
So then
That's a
next
very
is
valid point.
Yeah. So you should never, if you see the news and buy something, means then you are got stuck. That's it. Because news doesn't come in the initial stages. Everything, all the accumulation happened, then only news will come. They want to sell it.
Yeah.
And the future, the Warren Buffett is one statement is there that future generation is always going to be better, population going to increase, consumption is going to go high, inflation is going to keep going up. The stock market also will keep going up only. Okay, so always that you should never be bearish in the markets. Okay, if it's bearish, the main thing crux you have to think is that the market will be going to be bearish only for 20% of time and bullish for 80% of time. But 20% of time, the market will fall very fast. The 80% of time, market will go up very slowly.
Yeah.
Okay, you should have the patience for seeing the up move also. Same way, you should be able to change your mindset to see the down move also. Okay, both you should be ready. It's not that you always become bullish and always become bearish. You should be able to shift your mindset from 80-20 ratio so that you can make money from both the times. So market corrects significantly only when there is a significant gain. This is very important rule. If you see, I will show you some examples. You can see tulip money. You heard about tulip money, correct?
No, to be honest.
Okay, the tulip flowers used to be sold. It seems a very long time old.
Correct.
16, 30 times, no? Those times. The tulip flower was very rare. It seems, no? 12 years it takes something to blossom. Okay,
Right.
So people started selling the tulip bulbs. Okay, started selling so much, and people used to even sell their house and buy the tulip flowers.
Oh my God. Okay.
That was the craziness for tulip flowers. Then people start trading the tulip flowers, and the price went by 60 times. Okay, crazy. People are buying so crazy like Bitcoin. Just think of Bitcoin, same thing. Okay, so when price goes up so many times, the crash happens. And most of the times, whenever the crash happens, the futures come into play. F&O futures, correct? So Warren Buffett tells that futures of weapons of mass destruction. Okay, so that's what important. So when you're trading futures, you should be very aware of those things and be ready for destruction. Okay, if you're not aware of what's happening, how the market operates, then it's going to be a big problem. Whenever the future market, if you see tulip money, when the tulip flower is being sold, you cannot sell a flower without holding it. Okay,
Correct.
so that's the time they introduce the futures at that time, whatever that time. That's the time people was able to sell without holding the tulip flowers.
Right.
Then started selling and 90% loss happened.
Oh my God.
So these are the examples what I mentioned here, where when there is significant number of times a rise in the price, then the crash happens. Okay, the nearest latest example, Bitcoin. Bitcoin went up by 20 times in 2017. So that's the reason you saw a significant correction of 80% in the stock, in the Bitcoin.
Yeah.
Okay. So this is what the basic thing you should remember. When there is some significant rise, HEG, you saw the HEG example, no? HEG also. When there is significant rise, there is a correction happens. Bank Nifty, if you see like Nifty or Bank Nifty, it has just gone up by 2 times in just 5 years, 6 years. So it's not a great rise actually. So that is the reason you're not seeing any correction actually. And also another thing is that index are managed by the country. Index is the face of the country. What happens is nobody can beat the index. So Warren
Right.
Buffett launched even a competition actually, telling that anybody who can beat Nasdaq
Mhm.
consistently, he'll give $1 million. He announced
Oh,
actually.
right. Okay.
Nobody came forward to take the competition, and one person came, and he was able to achieve only 1 year. That's it. After that, he could not achieve it.
Right. Right.
So
Right.
beating index consistently is not possible at all. That is one principle. So when you invest in index, okay, there is a guarantee that you can get your capital. Even there is a big problem also. Even there is world
Mm.
war also.
Yeah.
Okay, there is a high probability that you will get back your capital.
Right. Right.
Chance is
Right.
there. But any stock, even Reliance or anything big stock, whatever you tell, okay, if anything can happen to any stock, but index nothing can happen because everything will change. If you see what happened to Punjab National Bank, still Bank
Yeah.
Nifty is surviving. Bank Nifty is surviving. What happened to Yes Bank? Still Bank Nifty is surviving.
Correct.
What
Correct.
happened to Zoo Enterprises? Still Nifty is surviving. So whatever
Mhm.
happened to the index stocks also, Nifty will be managed in such a way that it will be kept high always.
Right. Right. Right.
Okay,
So
there is
you
one
were saying
small.
index-based stocks are always safer. That's what
No,
you're
no, no,
saying.
index. No, 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 not index-based stocks. Index always outperforms as compared to the any individual stocks.
Okay. Okay.
For
Okay.
example, in the Nifty, you would have bought a Z and in Z and you are given 10% weightage.
Yeah.
Okay, but actually the weightage of in Z Entertainment in Nifty is say 2%. You given a higher weightage in your portfolio, and all the 50 stocks you cannot have the same weightage actually.
Correct. Correct.
Okay. What happens sometimes
Okay.
you become panic, you sell some stock, you book profit in one stock. But in case of Nifty, as you buy as a bunch of an index, then you don't come under the problem.
Right. Right. So by looking at the Nifty, you can make out, what is the weightage of that stock within that, and then you can make out, how important that stock is,
Yeah,
given
I'll
that
show you.
individual.
There is a website. Have by with this. It is called niftyindices.com.
Okay.
This stock, for example, Nifty, select Nifty 50. You can see all the stocks. What is the price change? What is the price impact? What is index? Actually, there is a weightage also for each and every stock that is not shown here.
Mhm.
It will show you how much the stock has, the index has changed because of this stock.
Right.
Okay, and similarly, you can see for Bank Nifty, all the index also. There is a
Mhm.
weightage given. Maybe I'll show you my own thing for Bank Nifty. This one live data you'll get once the market opens.
Right. Right.
Niftyindices.com.
Right. Okay.
And in case of Bank Nifty, I have made one small sheet actually. For example, the market, this is the weightage. HDFC Bank 35%, Kotak Bank 13.8%, ICICI Bank 15.5%. This is the weightage actually. When this stock moves, whatever the weightage of this impacts on the index. So if you see like for because of HDFC Bank, because of ICICI Bank, the market Bank Nifty came down by 76 points. Because of Yes Bank, the market moved up. Bank Nifty moved up by 31 points. Hello, can you hear me?
Yeah, I can hear you, Ramesh.
Okay,
I
okay,
was,
okay.
I just go on mute so that you don't have a background noise.
No problem.
The other point I wanted to ask you was like, probably it's a very layman's question. Say, for
No
example,
problem.
I see ICICI has gone down, but Yes Bank has gone up because
Hmm.
of its performance, and the Nifty has improved because of that. And my probably the layman's mind will say, okay, go and invest in Yes Bank because it has actually the potential of moving the market. But rather than doing that, I should look at the technical charts. I should look at the other news and then invest it, because that could be a temporary, probably a momentary change, and then there could be a change which actually may not be relevant. Is
See,
that
when
understanding?
the broader market is down, okay, when the Bank Nifty, you have to see the main component, macro view of Bank Nifty. If the main component is coming down, okay, whatever the stock is very strong, that also will come down or may not go up actually.
Yeah,
Okay, so when the broader market is weak, you cannot enter in something small ones because the probability of you making money is very less that time.
yeah. Yeah.
It may go up, but the problem is there is a risk attached to it also.
Yeah.
Okay, so when your overall market is bearish, then you should be bearish till the time you have some indication of getting some longs.
Right. Right. Okay.
Okay. Because we don't know when the market will turn around. It may take some time because there will be a big correction expected from the market, and several people are bearish, and the overall
Right.
market is very weak actually.
Right. 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 Okay. Is it because of the upcoming elections?
No, see, what happens that news always follows the price action. Okay, because smart people knows when they want to enter, when they want to exit. Once the price comes down, people started finding some news which is favoring the down move. When the price started moving up, people find some news that is favoring the up move. They'll find all the positive news, everything, until okay, because of this reason, market went up. If you see yesterday, Nomura, somebody, some investment managers, somebody, they gave telling that GDP might go slow down to 6.6%. Somebody will keep coming with some bearish news to support the down move. So news always follows the price action. So price action is ultimate. Anything
Right.
happens, after the news will come.
Okay. 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 So then how do you keep a track of, of course, the technical charts is one probably one big thing which you really have to look at. But then
Yeah,
is that also not following the psychology of people of, how the markets will perform? Because there is an extent only up to which the individual performance of that organization will influence its growth or its performance on the share market. But it will eventually be the sentimental of people which is driven. But what I
because
understand from you is it's the other way around.
one picture speak thousand words. Okay, whatever the sentiment, okay, you can see it from the charts itself. You will not bother about the sentiment. You will not read any news. The chart speaks on itself. If you see here, Z, okay, Z, what we've been telling, the chart, the length of the bar candle, okay, this is a candle, correct?
Hmm.
Sorry, this is a candle size. Okay, the
Yeah,
length
yeah.
of the candle speaks about psychology of the people.
Right.
If you see here, the green bars, whatever going up, it
Uh-huh.
says there is a greed. Okay, there is a greed because of that people there is interest in the company. It's going up.
Hmm.
When
Hmm.
there is a fear, what is the fear size? Size of the fear indicated by the size of the candle also.
Right. Right.
Okay, see the size of the fear what people have.
Mm-hmm.
Okay, when you see the Dow, what happened is that we reached almost a level of 2015. four
Yeah.
years back. We
Yeah.
went in just a few days, a few months. Okay, we reached 2015 levels.
Yeah.
Okay, so your question, what is the question? Actually, original question
My
about the entry
question was,
psychology.
yeah, my question was, I will, one has to read the technical chart, and what I
Yes,
understood from what you were telling me is that basically it's the market which automatically works, and people find some news around it to just justify why it has gone up or gone down.
yeah.
But my probably I may be extremely wrong because you know the market better. But my understanding was that because of certain sentiments, say for example the upcoming elections, now there is a fear that okay, the BJP government on their own may not be able to form the government. That says that what is the probability of a stable government at the center. In that case, they may not, the sentiments are low and people may start selling their stocks saying that okay, yeah, it will be substantiated or it will be supported by the individual performance of the
See
company to some extent. But
if you see like
but
the elections, whatever. Okay, you remember about Donald Trump. Okay, when what the everybody told, if Donald Trump comes, the market will collapse.
hmm,
What happened after that? The market actually
correct,
gone up after Donald Trump came.
correct, correct. Yeah.
Correct. So the because of people, the smart people or smart investors or big traders, they will plan some news. Okay, that is favoring them to enter the market, exit the market. Okay.
Right, right.
So think, for example, whether we assume that Rahul Gandhi comes to power in a full swing.
Yeah.
Okay, assuming that happens. Okay. So do you think Mukesh Ambani will close his business, or
No.
Aditya Birla Group will close its business, or the sales will come down, or people stopped brushing their teeth, or people start living in the roads? No, correct. every business, what is the stocks you're investing? You're investing in stocks which is running business. Whether Rahul Gandhi comes to full power or BJP comes to full power, all these companies are going to do the business in the same way. Correct? There's a simple thing we should keep in mind. So we should not bother about the small ups and downs. As I told you, the population is going to go up, the inflation is going to go up, the market is always going to go up only, invariably of whether it's Rahul Gandhi or XYZ or Manmohan Singh or Modi, whatever.
Correct.
Okay.
So
if you remember, yeah, tell me.
So these are the psychological factors. Basically, we probably as laymen people say, okay, because this is going to happen, that may happen. Okay,
Yeah.
but the
Yeah.
technical chart is one thing which will basically tell you very thoroughly whether there's upward trend or there's a lateral trend or there's a downward trend. But apart from the technical charts, what are the other things which you can rely upon for doing your analysis?
Nothing. I'm telling you simple because there is something called KSS. Keep it simple, stupid. They will tell. Okay. So what they tell is if you can write your strategy in a small visiting card, okay, then that is the best strategy. If you have too many strategies to follow, it is very difficult. Okay, how many things you'll remember? Okay.
Yeah.
First of all, to make profit, first you should know the trend of the market. That is very important. Okay, the trend of market always will will be made you indicated by the technical charts.
Yeah.
Okay.
Yeah.
Because all the people who are into the market in the particular stock, they know about the news. For example, Reliance Industries, somebody have 1 crore shares of Reliance Industries. They know about the company and what are the information. They have put one guy in the board also to know about the company, what's happening, any news developments. He'll take more precaution about the company. Okay, so anything wrong, definitely the volume will show you that something wrong with the company.
Yeah. Mm-hmm.
Okay, because some news you cannot know. There is some fraud happening about Reliance Industries. Somebody will come and tell you no. By the time somebody tells you, the market will collapse already.
Yeah, correct.
If you see DHFL, the price fell down. Okay. Yesterday news, if you see, the total disbursement for the last quarter of DHFL was 500 crores, as against a normal disbursement of 45,000 crores.
Mm-hmm.
So they don't have money to disburse the housing loan at all. Okay, DHFL, if you see people, that time when it fell down, people who bought on that day, you see the day when it fell down that day, people would have bought that time. Okay, do you think they would have made money? 348 at the time they would have bought. Assume that, okay, it was 600 rupees, such available 50% discount, just grab it, you think you would have thought. Now it is available 200 rupees. Even after 3 months, 4 months. Okay, so you should not enter stock just for the reason that it was available cheap as compared to the past price. Past is past.
Understood.
Okay. Understood. And maybe like about PC Jewelers also. What happened?
Which one?
PC Jeweler.
Yeah.
So stock that fell down from high of 600 rupees. Now it is around how much? 200 rupees. Geetanjali Gems.
Yeah.
It is around 640 rupees. Now it is 1 rupee 20 paisa.
Wow.
Okay. So just for the reason that it is available cheap compared to the past, it doesn't give a qualification of buying the stock. Okay. So you should, as any new investor or even what you can tell, like professional investor also get to the trap sometimes.
Yeah. Right.
You know about Jesse Livermore, no? I told you last time, no? Jesse Livermore.
Yes.
So he was also making a lot of money, $2 billion, $3 billion he made profit. Okay. The first time when he became bankrupt was he's listening to some other cotton trader and made some trades. And that's the time he got trapped and he made big loss. So even the big professional traders also make mistakes. Not that nobody makes mistakes. People make mistakes, no doubt about that. But how much you are able to control your greed and fear is ultimately comes in place.
Correct. And how much you expose yourself to that because of that greed.
Yeah, correct. Yeah. So and if you see, like when you're long or short, whatever in the market, okay, rise is more powerful than fall, because you buy some stock for 10 rupees, it can go to 1,000 rupees also. There is no end to the upside. Like Bitcoin, somebody would have bought for, assume futures was there for $1,000. It had gone $20,000. Then how would have covered your shorts? But when you're short, maximum is zero. It can put $0 only. That's it. This is one small principle you should know. Like for example, if Bank Nifty is falling, okay, you should not come under panic telling that, oh my God, there will be a big problem if it falls. Okay, nothing will happen because the bottom is zero maximum. It's not that all the banks are going to shut down and they can, because banks are the backbone of the economy.
Yeah.
Okay, that's the one thing. And second thing is, index will never be allowed to be broken by the country, by the government. Okay, all efforts will be taken to ensure that index are shown very good performer.
Yeah.
Even after Punjab National Bank, which made so much of losses, which have lost 4 years of income, okay, still they're surviving.
Yeah.
And there is two books which I told you, Intelligent Investor, which I told in the beginning. That book and Basant Maheshwari's Thoughtful Investor. These two books is a good read. You can just both are available in the ebook folder. You can just go through that. It's a very, very fantastic book. Okay, like in case of like Basant Maheshwari, he has given that his story of how he used to be as an investor, failed and then succeeded, how he was able to manage his emotions, so many things. Like he bought Voltas. Like once he bought Voltas, immediately started seeing all the ACs. He went by walk, see how many houses are having AC, split AC. That window AC. How many houses are having? How many houses are having Voltas? He started seeing into that level. Okay, that is the way he used to be such a depth investor.
Right.
You will not get to that level. Everything is available online nowadays. You can see the charts and you can read the figures and you can get into that.
Yeah.
So screener.in is one website where you can see these things. And second is charting.com. If you want to filter, for example, filter certain stocks, both can do it. Screener.in also can do it, and this charting.in also can do. Charting.com. You can do technical filtering also and fundamental filtering also. These two websites are very good, fantastic, and a lot of traders are using this.
Right.
So now, once we got understanding about the investing, what are the traps available? Okay.
Yeah. Yeah.
So just I'll give some introduction about Dow theory. You've heard about Dow theory. Okay. Many people talk about Dow theory. Every trader should know about Dow theory.
Okay.
Okay. What I'll give some crux of what is that mentioned Dow theory. For Dow Jones, for US Dow Jones was there. That's the time it was the book was written by Dow. So what the Dow theory tells is the same information is used by the retailers and the institutions. Okay, so the institutions trade differently the news, and retailers trade the news differently. Sometimes you see that there is a good profit by the company, the company would, the price will fall, and the bad results by the company, the price will go up. Okay,
right.
So whatever the retailers will do, the institutional investors will do opposite of that. If you see like Axis Bank report the first loss in the history, then Axis Bank went up by 20% per day. State Bank reported 4,000 crore loss. State Bank went up that day. Whenever the bank is reporting a loss, the media should tell, okay, this though the profit is there, loss is there, the NPS are good, better, they're able to recover this thing, all the positive news, and then they're taking the market to the upside.
Right.
If you see the PE ratio of Bank Nifty in 2008 October, it went to 8 times. Okay.
Right.
Now the Bank Nifty PE ratio is 55 times. Still, it is trading at the higher levels.
Right. Okay.
If Bank Nifty has to trade at the levels of 18 times PE ratio, then it should be around 10,000 levels now. So that is the reason the index should not be allowed to fall so much, because it's the face of the government.
Right.
Price discount everything. All the news will be there in the price. People knows everything, facts about the company, about the future prospects, and what's happening, what's going to happen, everything. All the top people knows about the company, and the price discounts everything. If, for example, Fed, some news comes, okay, about the company, already the price would have gone up because people knows insiderly about the company. That's the reason price knows everything. Price is God. In Gujarat they'll tell something Bhav che something they'll tell Bhav che something. Price is God, they tell you. Okay, and another thing is acts of God is not reflected in the price. Sudden tsunami comes, earthquake comes, volcano comes, those things will not be known because it's act of God. So that is not taken in the price. There's something happens and the price will behave accordingly after that. So the Dow theory tells about the primary trend where they tell the trend is up. The primary trend is up. If it makes higher high, higher low. You know higher high, high low. I heard about that. So what is the price? Price goes like this, comes down, goes up, and never breaks the previous low. Okay, it goes up like this.
Right.
It goes like this. It's called, because if you see this low is not broken, this low is not broken, this low was not broken.
Correct.
So it is called higher low. It's making higher high. This high was there. It broke on the high. It went high. Went high. Went high. So it made higher high. Now prices are coming down. Here it doesn't stop and then comes down here and lower high, lower low form, and then lower high.
It goes up and
lower
then
high,
goes further down.
lower high, lower low.
Right.
So it previous high was not broken. Lower high is formed and low is broken. Low is broken. Low is broken. Low is broken.
Right.
So this is a lower high, lower low.
Okay.
That is very important. If the price is making higher high, higher low, the trend is up. Lower low, lower high is trend is low. The primary trend is up if the 200 moving average is taken supported. You know about moving average, correct?
Moving average as a concept I know, but I don't know it with regards to the market.
That's okay. So 200-day moving average is what you have to see. If the price is above the 200 moving average, it is uptrend. Below 200-day moving average is downtrend.
So how is this calculated, the moving average?
If you just in Excel, for example, it's day one. Okay. So the days, okay, this is the number of days. So okay, I'll put 10 days moving average, okay, for simple purpose.
Yeah.
You take average of this all the 10 days values. This is called 10-day moving average.
This is a simple average.
Simple average. This is called simple moving average.
Correct.
Then you take it next. What happens? The first figure is ignored and take the latest one. 10 days moving average. Yeah. Then again you take another value. You ignore the past value and always trailing. It's take the trailing 10 values. Right. If you take 200 days, it is 200-day moving average. Okay. So this is
they take an average of 200 days, basically.
200 days, yeah, correct.
Okay, understood.
Okay. So whenever the trend, I'll show some illustration also, you'll understand that. And the secondary trend, what they call second trend is if the price doesn't fall more than 1/3 of the from the high, 52-week high, was the latest high, what is in high, then the primary trend is intact. Any fall more than 33%, then we can tell primary trend is broken. It's a caution you should take to exit the stock.
Right. And whenever can you explain this example a bit?
Yeah, I will show you some example. I have some illustration charts. Okay, the volume must confirm the trend. For example, the price is going up, but very thin volumes means the price is being rigged actually. So you have to see the volumes also, whether the volume is supporting the price. Okay.
Right.
So I will show some examples. This is Amazon. The blue line, what I am showing is the 200-day moving average. Okay. So we broken this here and got immediately on the upside. What happens later? Many people know about 200-day moving average. Correct. It's not that we only know that. Everybody in Tom, Dick, and Harry knows about 200-day moving average.
Right.
So what happens? Because what happens that to trap the guys who knows everything. Okay, they go up and down sometimes. Okay, just to make the weaker hands exit the stock. What happened? If you see here 2014, it was around how much? Around $400. It went below that 200-day moving average, supporting, went up and down. For almost 1 year, it was around the 200-day moving average. You have to see the 200-day moving average, how the line is placed. It is a flat, correct? If it is flat, then it is range bound. When it started raising, then means started trending moving up. So once we started moving up 200 moving average, yes, you hold the stock. Here it was around $650, $100. How much? One third, whether it is moving below 200 moving average and closing more than one third, lost one third of the value of the high, then it is better to exit the stock.
Right.
And once we start moving up and about 200 moving average, you enter the stock again.
Right.
Okay. Now, if you see, if you start moving, if you bought here, you sold here and got here, not lost anything here, great. Maybe a few $100, few $10 you would have lost. That's it. Yeah. After entering the stock into 16, it never went below 200 moving average. You saw here. So we entered around $600 until $1,700. We are just $2,000. We started going up. When the stock is about 200 moving average, it is uptrend, and 33% of the high is the stop loss for you. Any stock which is dropping more than 33% of the high is a stop loss, or 200 moving average, whichever is higher, whichever is earlier.
Okay. Okay.
So Amazon is like how you entered here. Next, Debenhams. Okay, if you see example of Debenhams UK, we went below 200 moving average. Assume that the last example Amazon is a great company, everything is blah blah. Okay, went down 200 moving average, just exit. Okay, we don't know what happened. No, something happens, go wrong. You should never be long in a stock which is below 200 moving average. Simple. Okay, even forget the 33% whichever is earlier. If it is below 200 moving average, but only 20% down from the low, from high, you exit the stock. Okay, if it is staying for more than 3 days, continuously 3 days, maximum you can keep 3 days threshold. If it is holding for more than 3 days below the 200 moving average, you should just exit. And if it moves, goes above, no problem, you can buy it. Okay, if you see Debenhams, it went below, went above, went below, just trap the guys. Okay, it went below that. After that, once it went slightly for a few days, it was there. After that, never it went above that. Right. It is around $3 now. 3 pounds, 3 pounds, I think. Okay, from 100 pounds, it went to 3 pounds.
Right. Yes.
So keeping simple rule of 200 moving average, you would have got safeguard to your investment.
Yeah, correct.
Reliance Industries, 200 moving average. It's a big indicator of your long-term uptrend. Then you see your Facebook, $40, it went to $200. Whenever there is an exit low, okay, you could exit it here. If there's a crash, flash crash, then you should just wait for some time. For example, sometimes there Apple also there's a flash crash. Then because of some trigger of algos and robos happens sometimes. Because of what's the type of news you have to see. Because you don't have a chance to exit here actually. If you exited here, you could not have entered also. Flash crash because of some no news. It could be because of the technical wrong errors. Like there was a incident happened by a trading academy, and sorry, this portfolio management in Japan. A guy wanted to sell one share of 610,000 yen, Japanese yen stock. He made by mistake. He sold that stock for 610,000 shares, 610,000 shares for 1 yen actually. So in fraction of seconds, they lost $400 million actually. They realized the mistake, and before they tried to stop the order, most of the orders are executed. So they lost $400 million because of the wrong error. So those kind of errors, without any news, some crash happens, then you should not exit the stock.
Right.
Depends on the news also. Okay. So 200 moving average will give you enough indication about the stock trend. HDFC Bank from 2017 is holding the 200 moving average. It came down here without any bad news, just because of general news, whatever. Okay, correction. It came down. It's better you be away from the stock when it's below 200 moving average, because it doesn't move so fast. Actually, 200 moving doesn't move so fast. If you get into the more technical indicators or details, then you can even try to get into the stock. We'll see that also.
Right.
Bitcoin.
So, you get these charts from investing.com, is it?
Yeah, I'll show you that also. You can used it before?
I've seen it a few times before. Yeah.
Okay. Bitcoin. See how Bitcoin would have gained 20 moving average. Okay. Dow Jones. Some whipsaws will be there, but better be away from the stock when there is a below 200 moving average. I told you through 2-3 days maximum. Okay, more than that you should not hold. There is a problem. There is a problem. I will show some more indicators which help you, even you can escape from that problem. Above that, it went above, survived. Went below, down. How much it crashed? Almost 4,000 points. 2,000 points it crashed. Dow Jones we saw. Infosys example. Microsoft. You can try this in investing.com after this webinar. Few stocks which you are aware. Okay, that can help you understand more analysis by your own practicals. So investing traps. Okay, these are traps. PC Jewelers, I told you, 640 rupees. In just 1 year, it came to 76 rupees. Yes Bank from 400 rupees, 50% correction in 1 month. Geetanjali Gems, 100 rupees, it went to 1.2 rupees. Devan Housing, 680 rupees, it went to 200 rupees. So never get the stock which is falling by more 20%. I told you, no? Just following the rule, you got avoided the trap.
Yeah.
Punjab National Bank, after the fraud, it came down by 20, 5%. It came down from how much? 230, it went to 76 rupees. Tata Motors, it never went away. These stocks try to see 200 moving average. Okay, then you understand how you got protected. Z Entertainment, again, DLF, from the high of 2,200, it came down in 2008. 10 years, just trading the 100 rupees band only. Prabhat Dairy, you seen about this case, no? About the company. It came at 150 rupees public issue. It went up to high. So they sold the dairy business, which is the complete crux of the business actually. They sold the business to other party and they're getting cash. They're just thinking of how to use the funds actually. Can you hear me? Hello? Can you hear me?
This conference will now be recorded.
What I'm telling is, for example, you are holding a stock, is going up, okay? Let us take example PC Jeweler. Now here, it 600 rupees was the price, okay? 33%, 1/3 is how much? 1/3 lost from the price, 180 rupees.
Correct. So around 420 is little bit trading. Yeah.
Yeah. Okay. You have to see 200 moving average also, and whichever is comes yearly, your stop loss. That is your stop loss. If you're a long-term investor, so assume around 480 rupees. If you are exited, you will save now. It is 75 rupees now.
Correct.
Okay. So this simple principle you should use as per Dow theory to protect yourself. So this chart, you just go through these companies also, and what are companies you know, or you can test those things. 200 moving average and 33% of the highs, whichever is earlier. How much would have made profit just by exiting? Okay, if it's not that you make profit, it's a real profit.
Correct.
Even avoiding loss also is a profit.
Correct. It's the opportunity income or your opportunity.
Yeah, correct. Because you are protecting your capital.
Yeah.
Okay, because I like, for example, X Bank, I bought some around 270 rupees. Okay,
right.
It was very good. The news was sudden surprise. It fell down just in no time. So exiting, we don't know what is the news, whether it's a flash crash, whatever. Okay, I not bought anything at that time. When it went to around 170, 180 rupees, then I bought some shares and then averaged out. It was around 260 rupees. Now when the market went up 225, 230, I exited all the shares because whenever the comes down like this, it takes a lot of time to get inside.
Right.
So better to protect your capital, get maximum capital what you can get from the stock.
Right.
And Z Entertainment is one stock which fell down, and DLF it fell down from 1,200 rupees. Last 10 years is trading in the 100 rupees band only.
Yeah.
So if you just use the principle of 20% fall, you avoided from 9,000 rupees, 90% erosion would have been avoided.
Yeah.
Prabhat Dairy is one case where what happened is the public issue they came around 122 rupees something. It doubled the money, okay? To double the money. Now the news came that they sold the dairy business, which is the main business of the company. They sold the business to some party who is giving good price, and now they are thinking to invest that money in some other new business. Okay, now the investors lost the confidence and now it crashed 70 rupees now, below the IPO.
Right.
Okay, so if you're using the principal 240 rupees, 33% or one third. Okay, 30%, whatever, assume that 60 rupees, roughly 65 rupees. It falls that you just got avoided actually, or 200 moving average. Okay, these two small principles you should take care.
Yeah.
Okay, so we'll see some few principles. Very simple principle, use it. Not too many, maybe 25 rules you keep it, and as I told you, you should be able to write your principles in just a small visiting card. Okay, never have so many rules and process so that you get confused yourself. And trade electronic and liquid markets. Non-liquid markets, you don't try to get into stuck into that because you will not be able to sell later. For example, Motor General Finance, I told you, that is having 3 lakh shares. Okay, if you just go to that stock and see, there will be just not more than demand of 1,000 shares maximum, or 100, 500 shares. There will be no sellers or buyers much. So if you just get to the illiquid markets, you get stuck.
Yeah.
Have realistic expectations. Okay, many people would tell about that Wipro, Infosys, they bought for 1 lakh rupees, gone to 100 crores, 50 crores, all these things. Okay,
Yeah.
those are all only stories. No, you cannot see many people doing that, seeing the gains in real life. Very few people, very few people. Maybe because of luck or some patience, that time it was there. Now, if you just hold like that, the chance of multipliers very less. Okay, you will end up in miss. Maintain a healthy balance between risk and reward. If you invest or buy something, what is the risk? What is the reward you should see? Like you're asking, Z and Diamond, whether shall I buy? What is the risk and reward you should see? When the market is so bearish about the company, they are seeing for stake sale, and they released a news also telling to creditors that we'll pay all the dues, no problem, but we cannot guarantee what time we'll pay. So that's the news they given. Okay, that's a cost system. There's a status of the company now. Okay, I have a system that produces 5 trades per week. I say if you're trading, not more than 5 trades per week. Means not for okay, trading means that. Okay, this is for trading also. Before starting the trading, I'm just giving this all the things. Start small but grow big. Automate your exits. Whenever you enter something, try to put some exits. But anything open gap down, they cannot do anything about it. Okay, when there is a flash crash also, what happens that when you put a stop loss order, it triggers the market rate. When something falls so fast, you put a stop loss order. For example, you have 1,000 shares of Devan Housing. The price started moving from 600 rupees to 300 400 rupees. If you put 1,000 quantity of order, the trigger would be 500 rupees assume. By the time you execute 1,000 quantity, all the robotic trading, algo trading would execute at 300 rupees. Okay. Right. So it will be killed literally.
So in that case, the stop loss doesn't work, is it?
Yeah, will not work, because what happens, like for example, in options, several times we could see actually. For example, there is an option which is around 500 rupees, assume it's illiquid contract. Buyers are 500 rupees, sellers are 600 rupees. Some suddenly, because of the panic, somebody trying to sell 600 rupees at 550 rupees. If you put market rate, thinking that 500 rupees somebody is there to buy, I'll sell it market to 500 rupees. The guys who are in the trading terminal, they hold the servers next to the trade NSE building. Okay, so the time they reach is 3 seconds earlier than what you see the price actually. They have advantage of 3 seconds better than you. When you put a market order, they'll see the trigger immediately and then change the orders immediately. Okay, they do it manually, they do it all automated. The 500 rupees what you see in system will take it 20 rupees. They'll take it 20 rupees. So you will be thinking that you have some say 100 200 quantity, you want to sell 500 rupees, you put market order, whatever the price, everything is automated. The 500 will be cancelled and go to 20 rupees or 100 rupees. Right. And you get triggered at 100 rupees.
But if you put it instead of market order, you put a price that this is the price I want to exit. Then in that case, if there is a hard crash, what happens? Will you still be able to exit?
If there are buyers, then you will get executed. Otherwise, there is no buyers, you will not get executed.
Right. So how to protect yourself from such crashes?
see, if you know before, it is better to exit, or you can have some puts. But the thing is that most of times this comes suddenly. Okay, if you buy put, for example, Reliance, some fraud or some problem comes, Mukesh Ambani does some fraud, he'll be arrested. Something news comes. Assume Reliance, 1,000 will crash to say 800 rupees also. Correct. Assuming that this will happen anytime, you keep buying puts. Say 5 rupees or 10 rupees, you keep buying puts. You'll be keep buying puts every month, and you lose actually. You lose 1,200 rupees just buying puts only. Okay, so you cannot have protection by buying puts because you don't know when the news will come. May not come also. The Z Entertainment, who will know that news will come like this? Okay,
Right,
nobody will know. Okay, if you keep buying puts for every month, thinking that Z Entertainment will have something like this or something, you'll be losing literally. Instead of the crash, you'll be losing only by buying puts actually. So you cannot protect yourself from that. Most of times you will get indication from technical indicators. Most of times we will see that also some cases where how we can get protected, how we get indication. Test your strategy on at least 200 trades. Okay, try some strategy and test yourself on the strategy whether it works, how it's like. As I told you, 200 moving average 33% from the high. Okay, try all the stocks, whatever maximum you can try. See, put that 200 moving average and see how it got protected. Simulate and see. Okay, and try on the index stocks, try on the non-index stocks, try on small cap, try on mid caps. Okay, struggling to identify direction of market. Understand direction of the market is very important. Okay, if you don't know the market trend, then it's a big problem. You cannot make money. If you want to make money, you should know what's the trend, whether it's up or down or range bound. If you it's not that you, most of times what happened, you also may be out of industry, I'm not sure. You've seen some profits. You're not you become greedy and don't book profits, and then after that, to your surprise, it became loss.
Exactly.
Okay, so that's Bitcoin, true. Many people would have happened in big case of Bitcoin. Okay, they saw $20,000. Somebody bought for $10,000. They see $20,000 became because of greedy and everybody predicting that it will go to $100,000 and $200,000, $500,000, all these things. They kept that, and now they are able to see $3,500. Okay, so parabolic move cannot happen every time because anything which is costing $10 will become $1 million. Not possible. Okay, nothing value goes so much fast. Not limiting your losses. Something you bought for $100 and you saw some small loss, thinking that okay, there's a small loss, it's below 200 moving. You saw the principles, no? 200 moving average, all these things. Though you saw that as per your principles, you should have sold it. If you're not sold it, then thinking that okay, only small loss, let us not leave the opportunity. It's a very good company, it'll go up sometime. Then some news will come that $95 will become $5. Okay, so if you don't limit your losses, then it becomes a big loss. You have to be strict with your principles and never allow emotions you to do the trading. Trading the wrong market. Okay, Venezuela, trying to trade to Venezuela. You see the Venezuela stock market, it is going on 3,000%, 4,000%. But by the time you bring your money, it is more loss because Venezuela currency is no more use. Lack of trading strategy. Every time you use different strategy. Okay, now you saw 200 moving average. After that, you saw some other principle. Keep shuffling between too many systems. You get confused and you will not have any clarity. You will lose confidence. You should be able to control your greed and emotion. Have some goals. Stick to the goals. If you get something better, keep booking profits. If you keep booking profits, you will not be hurt. Okay, never allow greed and emotion to take over your profits. Over trading, you made some losses, then you double your position, thinking that okay, I want to take revenge on the market. Whatever loss, I will recover from the market. Okay, I will not allow the market to sleep without giving me the profits. Okay, you cannot tell like that into the over trading. Market doesn't have any emotions.
Right.
Okay.
Ramesh, actually, I have to take my mom somewhere outside.
Yeah, that's what. Now this is a big topic. We will see the next week.
Okay. Fine. So, thanks, and sorry for stopping you.
No, I was about to tell you because this is a big topic. We cannot start now. Okay. So
Fine.
that's the reason. So I will share this PPT, okay, with the things what is going to be coming also. You
Yeah.
can have a look at it and do the try all the thing whatever we learned on different
Right.
stocks.
Right.
And if any observations which is contradicting your our discussion, you let me know.
Sure, sure.
Okay.
Send me the recording as well. Probably I'll try listening it to a couple of times so that if something I've not understood, then I can try understanding it and I'll try coming back to you.
Sure. Okay.
Thanks a lot.